Retail sales report showed consumers pulled back on spending last month. This comes as Wall Street gets ready for retail earnings next week, including Walmart. Joining us now is John San Marco from Neuberger Berman, and it's great to have you back on the show. And that's exactly where we're going to start, because we did get a weaker than expected retail sales number today. We also know autos played a big role there. So how does it speak to, if it does, the state of the consumer as we do look to more earnings?
Great to see you again. Thanks for having me on. Yeah, I think January is always a volatile month. It's particularly vulnerable to weather, and that was definitely an issue this January, as were fires. As were the fires in California, and I think if we take a step back and kind of see the bigger picture, the holiday season shaped up pretty strong and finished really strong in December. So there was also some give back from that elevated level of consumption. So, I don't think that January is particularly concerning. I think the strength of December is probably more indicative of where the consumer is going, but definitely enough to look out for in the report in terms of the consumer's appetite to spend on discretionary goods.
Okay, so where is the consumer spending, and how does it set us up for Walmart next week, which we know has been taking market share from quite a number of players?
Yeah, Walmart's sort of its own separate discussion. Its results, have gotten better and better really over the last couple of years, even while discretionary retail was getting weaker and weaker. So, first on the consumer as a, kind of reference, I think the right read here is the consumer is somewhere between fine, perhaps better, perhaps quite good. The consumer strengthening should only help Walmart. It was insulated when the consumer wasn't spending on goods for the home and so forth. But as the consumer strengthened, I think you could get even better results from Walmart. So next week, we would expect to see a very solid fourth quarter. It's quite possible that they take a conservative approach when they guide 2025, and that's what investors will zero in on for sure. But I think it will be, if that is in fact what we get, I think it'll be just that, a conservative start to the year to plan the business prudently and then try to do better.
I was wondering if we get an inventory hangover post-holiday, but I wonder how concerns about tariffs might feed into that. Are retailers stockpiling items anyway, even post-holiday, regardless of whether the consumer is strongly buying?
I think we are for the first time in quite a while. Inventory is coming back front and center in retail. You may recall there was not nearly enough inventory early in COVID, and then there was way too much, and we kind of had a Goldilocks situation. But to your point, really going back to the first threatened and then brief port strike, retailers kind of loaded up, and as demand has whipped around, a bit. You've had pockets of excess inventory. So I think that's increasingly an issue in terms of where, now prospective Trump 2.0 tariffs play into that. The bigger factor I would suspect is you might have actually had a little bit of consumption help from, some consumers buying ahead of potential tariffs and ahead of potential price increases. I think that'd probably be a bigger factor.